Good morning, viewers. My name is Ms. Amutana and welcome to our first program for Accounting Grade 8. The lesson for today is Basic Concepts and Terminologies. Here are the lesson objectives. 1. Define the word transaction. 2. Define the following concepts, which are source documents, assets, initial and final stock, income and expenses incurred, profit or loss as a result of transactions, liabilities, owner's equity, business entity. Identify kinds of business activities which are service rendered and trading. Define and give examples of assets. Define and give examples of owner's equities accounts. Define and give examples of liabilities. Define and give examples of income. Number 7, define and give examples of expenses. Now that we know the lesson objectives, let's get started. Let us then define the following concepts. We start off with transactions. Now, when we talk about transaction is the action which is now the buying and the selling of goods or rendering of services, which happen in a business at a certain time, of which money value, and when we talk about money value, we are referring to monetary value of such transactions, is recorded in the books of the business. Then we come to source documents. These are documents from which transactions are recorded in the book of first entry and which serve as a proof of a transaction. Assets. Assets are belongings or possessions of the business. Initial stock. The closing stock brought forward from the previous year is called the opening stock and is the stock on hand at the beginning of the accounting period. We move on to final stock. The value of goods that have not been sold or on hand at the end of the financial period. The value is determined by stock taking. Income and money which the business receives during its day-to-day operations. Expenses incurred, money spent on the day-to-day running cost of the business. Profit is the gross income less expenses. In other words, when income exceeds the operating expenses of a business. Loss is the gross income less expenses, which is basically when the expenses of the business exceeds its income. Liabilities refer to the money owed by the business to outside persons or businesses. Owner's equity, accounts that shows the interest of the owners in the business. Business entity, the owner and the business are two separate entities. Therefore, only the business financial transactions are recorded in the books of the business. There are two kinds of business activities, namely the trading business and the service rendered business. When we talk about a trading business, we are referring to businesses that buys goods and sell the goods to the customer at a higher price. For example, clothing shop and grocery shop. While a service rendered business, these are business that renders a service as a means of generating income. Service rendered business does not sell products or goods. Therefore, the income of this business is called current income. The examples for service rendered businesses are taxi businesses, a doctor, or a hair salon. Now let us look at the definition of asset. When we talk about assets, we are referring to the belongings or possession of the business. There are two types of assets, namely fixed assets and current assets. When we talk about fixed asset, we are referring to the possession or property with a long life to be used in the business. Fixed asset can stay longer than 12 months in the business, while current assets are assets which have a short life and can be converted into cash easily. Current assets cannot stay longer than a period of 12 months in the business. Now let us look at the examples of fixed assets, which are land and building, vehicles, and equipment. And when we talk about equipment, please take note that the following items are classified as equipment. And these are furniture, shelves, machinery, computers, printers, refrigerators, and cash registers. Now let us look at their examples of current assets, which are stock, bank, cash, petty cash, and cash float. Let us look at the definition of owner's equity. When we talk about owner's equity, we refer to the accounts that shows the interest of the owner in the business. There are two owner's equities accounts, which are capital and drawings. When we talk about capital, we are referring to the money or asset the owner contributes to the business, while drawings is any assets, goods or money that the owner takes from the business for personal use. Liabilities refers to the money owed by the business to outside person or businesses. Now, examples of liabilities are loan, creditors, and bank overdraft. Let us then move on to income. Income is money which the business receives during its day-to-day operations. Examples of incomes are sales, rent income, and commission received. We move on to expenses. And when we talk about expenses, we are referring to money spent on day-to-day running costs of the business. Examples of expenses are purchases, telephone, rent expense, and salaries. Let us recap on what we have learned today. We have looked at the following definitions, which are transactions, source documents, assets, initial and final stock, income and expenses incurred, profit, loss, owner's equity, business entity, as well as kinds of business activities. I hope you have enjoyed today's lesson. Before I say goodbye, I would like to ask you the following questions. A. Define the term transaction. B. Is a service station classified as a trading business or as a service rendered business? Thank you for watching and goodbye.